Alrighty, I think we're there. We had a little bit of a technical hiccup there for just a second. Thought I was streaming, and alas, I was not. So it just, sometimes it works, sometimes it doesn't. But why so many YouTubers on or real estate agents on YouTube? And there's a lot of them. There's a lot of us. Well, it's a great way to get in front of people and share data. And in the old days, we used to have these. They'd call them lunch and learns or happy hours. And you get with a title company, get with a lender. Hey, you want to kick in some money? We'll invite people to a lunch and learn, and you provide either some drinks or some sandwiches, and you talk about the market. And you have maybe 6 people show up. So at least this way, you get to have a lot of back and forth conversation with actual buyers and sellers and reach out to about 2,000 people. So I like it. I'm not sure why my chat is not showing up here, so I'm going to dump that and just look at the live chat that comes in. Excuse me, but let's talk about the talk of the day here as we're looking at this, and that is the 30-year fixed average now, 6.35. Did you hear that hammer? That hammer is the hammer on sales for the rest of the last quarter. There's no doubt. I mean, our sales are already down something like 28%. And Sean here saying hello from Rocky Point. Thank God I followed your advice about Rocky Point. I got stopped by the Federal and they took all the money I had, $40. For those of you that don't know, when I was asked about Rocky Point, I said, you got to watch the speed limits. If it says 20 kilometers, don't go 21. And only put $40 in your wallet because you have to pay the policeman right there. They say that they're saving you a trip to the courthouse, but they're really not. Now, if you open up your wallet and you got 120 bucks flashing around in there, guess how much your fine is? Yes, it's 120 bucks. So, Sean, I'm glad you took that advice. Now, I've never had to pay him because if it says 20, I go 20. I've been following that for a long time, but enjoy yourself down there. The Fed rate hike, it says here, the big Fed rate hike coming next week. But that's not what matters. And basically they're saying that, just how big the rate hike is a matter of debate. Are they going to come in at 0.75 or are they going to come in at, 1? So nobody knows. The market's pretty jittery. And Pat yesterday shared a chart showing mortgage rate volatility index. And it's just up, down, because markets are really jittery, and the Feds have to clamp down on inflation, and that's what they're showing here. And here's the big shift in Fed policy. This went way up, and then stocks got hammered. You've always heard the saying, follow the Fed. Well, this is why, folks. If the Fed says they're going to raise rates, it affects more than just what you see in housing. So everything's getting hammered pretty hard. Says, what are the unfriendly messages and the shift in Fed policy outlook specifically? Back in January, the big wake-up call was the Fed's clear communication that its rate hike timeline would play out much more quickly than it did during the 2018 tightening cycle. And they made it very clear with a lot of front-end speeches about what they were going to do in the market, and they did that. And Sean, I'll show you some market demand report for Gilbert and Mesa here in just a moment. So we've got some guesses down below here in the chat saying 100 BPS. Boy, they have every reason to do it. I just don't know if they're going to do it, and that's what everybody's going to be watching. So look here, and this is our stats here out of the Phoenix market from the Multiple Listing Service, and it's through August. So it said that sales are up 2.9% versus July. Why is that? Rates went down to about 5.1. Now that, in and of itself, not that big of a deal, right? Down to up 2.9. But what it illustrates to you is just how rate sensitive the market is right now. So we went down just about the baseline of about 5.1, and all of a sudden sales go up almost 3%. Conversely, now we're up at 6.3. I expect to see the September numbers just be in the basement. Terrible. And because we're going into the fall and the November, December soon, those are slow months anyway. So this is what I mean about the big rate hammer. But where sales are down 28.8% year to date already, just comparing to last year. And but buyers do control prices. buyers need to crash the market according to Charlie. We don't need to crash it. We just need some pricing adjustments. We don't need to cause any pain. I'm always going to jump off that bus, but everybody's entitled to their opinion. We're seeing here that the CMI has dramatically changed, and it's interesting when you read the Cromford report. They've always been really frank about their predictions and saying what's going to happen, but I kind of noticed a trend where they really weren't accepting the numbers in their commentary. They were looking at things and going, well, this could mean this, it could be that, and they were pretty dovish. They're highly accurate in the collecting of their data, but I just kind of noticed that while I was reading some things. But here's the top three on the floor here, and it's Maricopa, Queen Creek, and Buckeye, because they're in the outlying areas, and that's where all the buildings going on, and that's where all of the incentives are for new builders, and inventory is now through the roof, so their CMI has plummeted, and it's gone down. Remember, we were seeing CMIs down there like 300. Even Paradise Valley still 193, Fountain Hills 173, and CMI, of course, 100 means it's evenly balanced between buyers and sellers. But when you get here from Chandler on down, the advantages for buyers. The other interesting thing is I wanted to show you this, and this is that. Let me pull out my little magnifying glass here. This is come on, you can do it. There we go. Buyer contributions for closing costs, 16.7%. Now, some of that may be rate buy down. They're offering rate buy downs, but now if you watched our video interview with Pat yesterday, that's not making as much sense as it did just a few weeks ago, because it's hard to get a significant rate buy down when you're sitting here at 6.35, and some of the big banks are looking at 6.7. So it's pretty rough. And so to get a rate buy down that gets you down to like 5.1, you're paying a ton of money. So, and the rate buy down is you're just prepaying the interest rate, and some of that can run as high as $20,000 to get that rate down. Now, if you were paying that, if you were paying for your own rate buy down, some of the advice that Pat gave yesterday was, I don't think it's a good idea when the markets are this volatile, because you may be starting here and paying down to there, and then by next year we might be back down at 4.5% again. You just threw away all that money for a rate buy down to get you locked in at like 5.2. So he advises against that. And so rate watch is going to be very interesting to watch. And I just see rates driving us crazy all the way up to the end of the year. And I don't see anything on the horizon when I look at the economic data that says they're going to come down. So that's just what we're seeing, and it is what it is. And one of the guys that we like to follow, Barry Habib, he goes, there's this bridge we have to cross. We're just going to ride it out. And that bridge we're crossing is we're watching prices come down, and we're seeing prices are down from the peak that we had this year to today, down about 6%. Now, we're not down 6% for the year. We're still up. So, but we're down from the peak. And if I look at the Cromford commentary here, let's see, that's not the one. Here we are. That's not the one either. Let me pull this up. It was showing that oh, I know where it is. It's in another section here. So, see, when I go live, I'm always not that prepared. But the average price per square foot is back down now to the level that we saw in late February, but it's still up 5.9% from the beginning of the year. So we haven't erased that yet, but give us another 3 months, we'll erase that. So that just means all the gains that we saw in 2022 are kaput. Tyler said, if you were looking to buy a second home, when would you pull the trigger? Not this year. Second homes, I'd definitely be keeping my eyes peeled for the second quarter of 2023, because if we get any rate relief, I think that's when we'll see it. But until we see that inflation number come down, you can expect this just to get rougher and rougher as we continue. Now, we saw some relief in inflation a little bit, the monthly headline inflation, big drop to 0 in July and modest increase in August. And what they mean by 0 is they're just comparing last month to this month. So when you hear a politician go, we had 0% inflation, not exactly. But that's what they mean by that. So now let's take a look at some of the inventory that we have out here in our active listings, because we're still seeing that new listings are not coming on the market. They're just slower and slower every week. And you can see it in the data here that we've just flatlined. We went up slightly last week, and this afternoon they will update this chart. And right now they haven't, so it'll come in later on. But you can see how it just kind of flatlined there for 1, 2, 3, 4 weeks and popped up just a little bit. And that's because of Labor Day weekend, because sales were so slow. So that kind of has to wring itself out, and that number will either stay there or pull back just a little bit, just based on the trends that I'm seeing. Now, if you go city by city here and pull up and see what's going on, let's say for Chandler for just a moment, and we look at their inventory numbers, we can see that we're at 715, and last year, let's go down to 2021, see if we can find it. I think it's this one. Last year we were at 262, so huge difference. And this is the way it looks in just about every city except for Fountain Hills and Paradise Valley. So you can see there we're 884, and last year we were sitting there at 306. So more inventory means it's better for buyers and so much harder for sellers now. You can't use comps. You can't go back 3 months and say, well, there's the average price. You're going to have to look at what's pending and what's under contract and make an assumption. And make an assumption that if it's under contract and the asking price was 500, you're going to have to make the assumption that they didn't get 500. I don't see any buyers right now going out and offering anybody their asking price. And if they do, they're asking for a ton of concessions. And they won't show up yet. What are your thoughts on layoffs that the Fed's trying to cool the job market? Well, they're already starting to happen. I don't know how intense they're going to be. Seeing more and more of it in the tech field. Seeing a lot of it with Amazon, FedEx. Announced big layoffs. Their stock dropped 25% this week. Amazon has canceled the construction of 100 new warehouses, so the layoffs are coming. I don't know how severe it's going to be and how far up into the suits and ties it's going to be, because you can have a lot of layoffs in the service and food industry, and as a whole it doesn't really affect housing because the income in those segments are a little lower. But when you start seeing corporate layoffs and it's across the board and it starts getting pretty broad, then there will be some pain in the market for sure. Rock and Roll says, enjoy your takes, no clickbait. I'll keep in mind in around a year I'll be in the market 50% cash on hand. Yeah, there's sure no reason to pull the trigger this year and wait, I'm a real estate agent, I'm supposed to tell you to buy. No, I won't. If it's not a good time to buy, I'm going to tell you. If you have to buy, though, if you are in a position where you want to buy and your lease is up and you don't want to pay for it, go out and start swinging the bat. Don't be afraid. You're never going to get anybody to accept lower than their list price the first week it's listed, so don't even try that. But you start cruising around now and you see homes are on the market 45 and 60 days, swing the bat. Give them the offer of a price that works for you. That's how you play in this market. Sellers, you can fold your arms and pretend this isn't happening all you want, but it's happening. And you're going to have to get used to buyers giving you lower offers. And if it's not a price that you want and you've had it on the market for 90 days with no offers and you're not willing to budge, then pull it off the market. You're done, because it's not going to catch up to you. The longer you're on the market, the lower your price expectations are going to need to be. And so it's tough to swallow. I mean, I've seen comments in real estate forums that say, I've been on the market for 45 days and no showings. How come? And people just go, well, it's price. Well, my seller thinks they're priced accordingly and they don't want to budge. Well, there you go. Sorry you took the listing. Agents have to have very frank talks with their sellers right now. Look, here's what's going on in the market. Sales are down 28%. Interest rates have popped up to 6.35. We're going to have to be better than every other house on your street if we expect to find a buyer. And you may not get your asking price, and you may not have any showings the first 2 weeks. maybe even the first 3 weeks. So let's talk about pricing strategy. If we're sitting here 3 weeks and we haven't had anybody, how much do you think we should lower the price of your home? Know that up front so that you can make that decision now instead of 3 weeks from now. So make that decision that says, well, if we don't have anybody looking at the home the first 2 weeks, let's go down, 5%. Don't go down $1,000. That's just a waste of time. And don't price it at $499, $999. So the reason I say that, people search for homes in brackets from 300 to 350, 350 to 400, 400 to 450, 450 to 500. If you're looking between 500 and 550, they're not going to see your home because of $1, because you price it at $499, $999. And there's absolutely no reason to do that. Just make it 500. Now somebody searching from 450 to 500 can see it. 500 to 550, they can see it. Don't put yourself in a little box because of $1. I'll get off my soapbox. Rick, do you know the average debt to income ratio in Phoenix? I do not. I wish I had access to that data. I don't see that. So I think I'm going to pull something else up here for just a second. The other thing that I've seen is the listings under contract. This shows you what's happening now, and this is under contract compared weekly. So this is where we're at here. Now you don't come closer to a number like that until you start getting to 2007, 2008. It's pretty low. So waiting for it to spring back is going to take some time. But like I said earlier, we saw that little bump up in August just because interest rates went down, 0.75% for a very brief period of time, for about 2 weeks. And that illustrates that it is true that there is a large pool of buyers out there that are waiting to jump in. They're not done. They're not permanently out of the housing market. They're waiting. And so if rates do come down, you can expect people to come up. It's like stretching a rubber band or winding up a spring. And they're out there and they're waiting for the number that works for them, because payments have gone up 40%. You can't have your house payment go up 40% and you go, oh, okay, I'll just suck it up and get the house. Me, cranky paperclip. Great thing about YouTube, you guys got some great names out there. I think it's funny. I made a comment yesterday on the channel that, I look at the comments that I get, and YouTube holds some of them for review, because that's the way I flagged it, because I don't want anybody going on a rant and swearing. I don't want any profanity on the channel, but I get to see them if they're held for review. And I tell one of my friends, I go, I need to start another channel just called Arguing with Rick. And he said, no, name it Bite Me. I'll just throw up controversial topics and just let you go for it. Michael says he's waiting. Everybody's waiting. And you know what the good news is about waiting now, too, is we're seeing some rent relief. You're probably not seeing it in your notice yet. Nobody's come in and said, hey, congratulations, your rent's lower next month. But that day's coming, so that we're at the peak. We certainly have enough apartments being built, and we have enough investors trying to put rentals in their homes. Airbnbs are not being flooded in the market yet, and they won't be. And it's going to be interesting to watch to see how many of those go up for sale the week after Super Bowl. That's going to be a party to watch, because you got an Airbnb right now. You're not letting go of that. You're going to ride that Super Bowl wave for a couple weeks, because the amount of money you can get is just off the charts. So I'm going to be glued into that one. Also, Open Door. I compared Open Door to like foreclosures now, because when a bank gets a house that they have on their books, they have to sell it. They're not going to say, okay, well, let's turn this into a rental. They don't have that option. Open Door's not doing that either, unless they decide to change to a property management company, which I don't see. So they want to sell the homes. And so they're going to keep pricing until they get a buyer. Now, I'm closing on an Open Door home next week. We got a really good price on it. And I know people have had some stories saying that, they've been difficult to work with. And maybe I just got lucky, but these guys have been terrific. I mean, very responsive. I sent the offer in. They called me back the next day, said that we were not close. We were kind of far off, so we kind of went up a little, and they kind of came down a little, and we did that for about 2-3 days. But they were responsive, and there's nothing worse. in a real estate market than the listing agent just not even calling you back. I mean, that's just the most irritating thing about the business. It's like, well, you got a house up for sale. I'd like to talk to you. We went down and did a final walkthrough this week with this great couple that's buying this house. And in the back, there was so much rain down there. They had artificial turf. At one corner of it had a little sinkhole. And so I reached out to them and sent them a picture. And they said, well, we're going to get somebody out there to repair that right away. That's great. So that's the kind of people that I like to work with. So I hope if you're getting something through one of these iBuyers that they treat you as well as they have me the past few weeks. Will we see short sales again? Boy, it's going to be a while, because there's only 1% of homes nationally that are underwater with their mortgage. And you've got to be underwater for quite a bit to be willing to do a short sale. Right now, an investor will come pick up your house if you need to get out from underneath it still, and they'll use it for a rental because they're still seeing some return on investment. The vacancy rate's still below 5%. And you got to look, you're going to have to be below 2020 levels on pricing to start seeing a lot of homes being upside down. And when we look at the foreclosure data that's out there right now, I'm going to see if I can pull this up. Here's foreclosures pending. See if this pulls up for me. Sometimes it doesn't. Yeah, it gives me a great big blank chart. So bear with me again. Foreclosures monthly chart. Try that. See if this works. There we go. See, we're just at the bottom. There's nothing going on down there. They aren't even pending. Even the ones that go pending right now, investors pick them up. So short sales, things are going to get very, very ugly before we see that. So we'll see what happens. But in the meantime, I don't expect any rate relief this week. We're going to watch the Fed. The Fed's going to be quiet now for 12 days. They can't talk. So they just wait till they have their meeting, and then they spit out what they're going to do. So there's just going to be a lot of news and a lot of speculation all week. What are they going to do? They're going to go 75. They're going to go 100 and everything. And then the market's going to try and price that in. Right now, the market has priced in that they're 0.75. That's it. They know they're doing it. There's no argument. They're not going to go 0.50. So they're starting to throw a little bit of pricing now in, saying, I think there's a chance they'll go 100, so let's price this in. If they do go 100, you might see rates come down a little bit. I know it's kind of funny that way, but that's probably what you're looking at. So as we look at these numbers and we watch the rest of the week, that's what we're going to look at, and I will keep you up to date here. Thanks for joining me today. Take care.